Since we spent a whole lot of time talking about quantum stocks, we can't really talk about quantum stocks without talking about the biggest players with the deepest pockets. And that's Amazon with their Ocelot chip, Microsoft with their Majorana 1 chip, and Google with their Willow chip. We just had incredible earnings from Microsoft and Meta, who are huge tech companies that tend to pull the entire market either up or down with them as they move, including quantum stocks. So today I want to talk about some of these big tech earnings because we still have Apple and Amazon tomorrow, and we have Nvidia next month. But we're already seeing the effects of these earnings because at a certain point, the companies, the guidance that they provide and the amount of money that they're making is going to attract investors despite macro conditions. So we did start the day with some scary GDP numbers, but all the major indices ended slightly in the green. It was kind of a weird day in the market. And now we're going to dive into what these tech earnings look like, why I'm personally considering moving from Nvidia into more of a core position in Google. And we've got a lot to cover, and we're going to do this in a short amount of time. So let's jump right in. All right, guys, we're going to start with our quantum watch list, which I have pulled up right here. And we see that today ARQQ was down 6%. We see LAES was down 5.8%. QUBT was down. IONQ was down. QBTS was down. Intel, Google, Nvidia. Our Defiance ETF was up ever so slightly. Rigetti held the line. And Microsoft was up a little bit. And IBM was up a little bit. But we know we've had some crazy earnings today. So I want to show you guys just in the aftermarket movement how much of a difference, as of the time of this recording, the earnings from Microsoft and Meta, what that looks like. So I'm just going to turn on my extended hours view here and look at this. We have Microsoft with a post-market change of 7.73%, which is huge for a multi-trillion-dollar company. 5% for ARQQ, SKYT, which we've been covering on this channel, Nvidia, which I've recently added to the watch list because of their investment in their Boston Quantum Center, 4.11%, Amazon, 3%, and this is before their earnings, and even some other quantum stocks are trading after market in the green. In fact, almost all of them. So that is promising, and that's a good sign. Let's take a look at the heat map from the day. So we see that today was more or less a flat day. There was definitely a lot of drama. If you opened your account first thing this morning, it was not a pretty picture. There was a gap down by 2% or more, especially in tech. And a lot of tech made recovery, I think largely thanks to earnings and the anticipation for the numbers. So Tesla gave back some of its recent gains today, and Nvidia just barely closed in the red. All right, so let's take a look. So Microsoft is soaring on earnings beats. So there's two pieces to all these earnings reports that I'm paying attention to, and I think a lot of investors are. Not only what their numbers are for the quarter, but what they're guiding for in the future. So we delivered a strong quarter with Microsoft Cloud revenue of $42.4 billion, up 20% year over year. Let's see, for the third quarter, Microsoft saw EPS of 3.46 on revenue. There's $3.46 on 70 billion. Wall Street was anticipating 321. At the time of this recording, US and Ukraine have signed a critical minerals deal. Now, this is a step in the direction of an economic partnership with Ukraine and solidifies the alliance and the partnership moving forward. However, it's not necessarily super market correlated. I think if we got this headline during the day, we definitely would have seen the market move on this deal. It's good news for sure. But these earnings in these tech companies are definitely more likely to be the main marquee banner story here. So we also saw that Meta increased their CapEx, which means more spending on Nvidia chips, which means the AI story is alive and well. So they beat on EPS and revenue, and their first quarter sales rose 16% year over year, while net income jumped 35%. Okay, so we see that there's fantastic earnings, and we have two more tomorrow from big tech giants. We have Apple and Amazon. Most likely, tariffs haven't affected them yet, so the numbers should be decent. So what can we extrapolate from these numbers? That the Magnificent Seven is roughly a quarter of the weighted average of the entire market. So the $1 million question is, what do Thursday and Friday look like this trading week? Well, I'm personally very bullish on tech in general for Thursday and Friday during the trading day. I think that these earnings will lift the whole market. They are lifting the whole market significantly in after hours, and that should hold through the day tomorrow, unless there's some curveball or something crazy that happens between now and tomorrow. I think you can expect tech to continue moving upwards, and we got confirmation of this today because big companies like Microsoft and Meta are still beating on expectations despite more challenges potentially in the economy. And not only are they beating, they're also guiding with strength and certainty, which is what you want to see from some of the biggest companies in the economy. So I want to talk about Nvidia. And, there's stocks in the stock market like PayPal that has a nickname like Pain Pal because you lose money investing in PayPal. There's stocks like AMD that are advanced money destroyer. Well, Nvidia has been no cakewalk for quite a while. The chart has gone and done a whole lot of nothing for the better part of a year, and you can see this chop. And if we actually look at the recent movement, we're steadily in a downtrend. And what I'm noticing about Nvidia is it's so sensitive and exposed to any type of news related to any AI competition, any chip competition. The investors in the mindset with Nvidia is that the moat that they've created, the product that they've created, is constantly under threat, and therefore the stock should go down. Despite the financials, this doesn't have anything to do with the fact that quarter after quarter, Nvidia is beating expectations on Wall Street. It has a lot to do with threats from other major players in the game, and not just in the US, but abroad as well. Like we saw the gap down with DeepSeek, and that was maybe a sign of things to come, the beginning of the end. So I'm still bullish on Nvidia, but it's definitely been something where, as an investor in Nvidia, I'm starting to think about position sizing. And I've had a lot of exposure to Nvidia for a long time, and it's felt like it's pretty common to see the stock take a 3 to 5% hit on any headline. And you can see that in the chart. We were at one point trading at 150, and it felt pretty good around earnings to be buying Nvidia around 130, 135, 125, 130. And lately, in the macro challenges we've had, the stock has dropped all the way to 93. And there isn't a super strong sign of a technical reversal at this point yet, while other Mag 7 stocks may be showing better signs. And we're going to look at Amazon and Google's chart as well. But what I would say for Nvidia, we can see that in post-market, we're most likely going to gap up from 108 to 113. So Nvidia has been pushed down so much that just seeing this CapEx spend from other tech companies is bringing the stock back up. Now, Google, at any time, any of these three major players could make an announcement on significant progress in this space. We haven't heard a lot from Microsoft since they announced their Marijuana 1 chip. We haven't heard a lot from Amazon since their Ocelot chip. We haven't heard a lot since the Google Willow chip, but perhaps they're biding their time. They're letting everyone know they're in the game and they're a player in the quantum world, and buying any of these three companies is investing in quantum, because part of their company is investing in quantum. So when I look at a company like Google, who's taken, if we look at the last year, an absolute beating, and is trading in the 150s, they just blew out earnings and expectations. Okay. So if we go back to December 9th, if you want to see in the chart the quantum enthusiasm from investors, when they announced their Google Willow chip, Google stock gapped up to 182, and then during the market day shot up to all the way to 200 and actually broke 200 before selling off significantly in this macro. So what is that move? That's a pretty crazy move for Google. That's a 30% move. So when you go on to when you walk into a store and you see, oh, your favorite item's 30% off, you're likely to pick up and stock up on that item. Well, that's how I'm thinking of Google at this point in time. Google crushed their recent earnings. They have YouTube, they have Waymo. And I think people are underestimating the fact that Waymo is doing 250,000 rides per week. They have Search, AI, they have Chrome, they have ads, Google Drive, Google Docs, Google Sheets, tools that I use every day in my professional workflow, and products that are quality and that I can trust. And so Google is also putting money into Willow. And right now, Google can be purchased for $159 a share, even after crushing their earnings. So they surprised by 38%. And here's the other thing I want to say about all of this, okay? So all of these stock prices, they might be 20, 30% off right now, big discount, come in, buy all you can, that type of thing. But as soon as we have a China deal, as soon as we have a deal with a major country, a major trade partner, when the Fed cuts rates, do not kid yourself. These stocks are going up. And if you don't have a position in these stocks at these prices, you could miss the move. Okay. We saw already that this market is capable of moving 10% in a couple hours. And that's still very much a possibility, especially with tech performing at the level it's performing. We just need some good macro news. The market is starving once again for good news. Let's take a quick look at Amazon, and we're going to look at Microsoft as well, and then call it a video. So Amazon in the last year has seen a rise and a fall. So from the peak to trough, we had a 33% move. Now we're talking about Amazon Prime, Amazon Web Services. Amazon is in so many, Amazon's 30% off right now. Okay. Let's measure peak to trough. Peak to trough, 33%. It closed today, still down 24%. So it's 24% off its highs. And we know they're reporting tomorrow. And don't be surprised if we see something like this from earnings. Okay. That's all I'm going to say. Maybe Amazon misses, maybe I'm wrong, but these prices will not last. I don't see that being the case. And finally, let's look at Microsoft. So case in point, Microsoft, if we look back 1 year, we can see in the chart that Microsoft loved this 426 point in the peak of our bull market last year. So we're looking at March, May, June, July, August, September, October, and Microsoft just loved hanging around this point. Okay. Well, guess what? For literally 2 months, you've been able to purchase Microsoft for less than $400 a share. And today, just after market, we have a huge move to the upside. You can see the post here. So we closed at $395 and we're already filling this gap back to a major level of support. And Microsoft was starting to flirt with the idea of $500 a share. So that's what I'm talking about when I'm talking about this opportunity may not last to get into tech at some sale prices. And quantum stocks also are going to generally follow the tech because quantum stocks are a risky tech play. However, the more progress that is made on the quantum front with both gate-based and annealing quantum computers, the more money that is going to flow into all of those. So that is all I've got for you today. A little bit of a different video, but the giants of tech really, we have to acknowledge not only what they do for quantum, but also how they have the ability to move the entire market. Even when our GDP is showing a little bit of weakness, the strength that they're showing can carry an entire market. So hope you enjoyed this content. If you did, please consider leaving a like or subscribe, and hope you have a great day in the market tomorrow.